Can everybody hear me sound? Do I sound good or do I have an echo? Do I have an echo or how do I sound? Very good, very good. We'll give it just a little bit more time for a few more to show up. This is going to be recorded. I'll try to get a lot of the stuff out of the way for the first hour, if I can. Just got through making me some nice chicken fajitas. I got enough fajitas to last me all week now. Make sure you got some water and you're comfortable. These sessions can run 2 hours if I let them. That's about the average. We'll give it 3 more minutes. So get comfortable. I'll give you my thoughts on the market. We'll look at a few charts. I know we're pulling back some nice support levels, but the bears are in charge. Go get me a glass of orange juice and I'll be right back. Good afternoon, retail traders. Hope everybody had a good weekend off, and we're going to talk about the sneaky snake and what you need to know and what you need to learn. This tune is Wager with the Angels. Welcome, retail traders, to the Sneaky Snake Trading Strategy Seminar. Last week I did one, and I realized after I recorded it, it was kind of echoey, so I erased it, and I wanted to come back and refresh our memories this week, and hopefully we'll have this recorded for future updates and future uses. The Sneaky Snake trading strategy, I started this, well, I've been trading for 19 years. I started back in 2004. 2004 is when I started watching the market, when I moved to Hawaii. And Martha, what was her name? Oh, I can't remember her name now. Lady got arrested back there for insider trading. Martha Stewart, is that her name? So I said, wow, that seems like an easy way to make money. And so I started studying patterns and following people on YouTube, and the internet was just into the scene. And I started my first chat room in 2007. So I was basically one of the very first chat rooms out there. And I've had 5 since. And I just love trading stocks. It's fun. It kind of changed, I played music for a very long time, and then this occupied my time, so I started just trading stocks. That was my new job. I still work part-time. I got a job to where I can work in the evenings and then be up in the day and day trade. So I own a small janitorial business that allowed me to have the income to survive. Plus, it gave me the time that I could educate myself in trading stocks. This last year, I left a room and I wanted to start doing a trading strategy, so I called it the Sneaky Snake Trading Strategy. I named it about 2 weeks before Tom T. Hall died, and he's the one that wrote the song, Sneaky Snake. If you've ever heard of it, you can Google Tom T. Hall, Sneaky Snake. So I was looking at the charts, and all these charts look like little snakes running around, up and down and inside and out, so that's why I named it that. If we're in a bull or bear market, we're definitely, when we broke down below 30,000, that put me in a bear mood. I've been in a bear mood for almost a year to begin with, catching the knives and scalping the knives on a daily basis, not swinging too much in this downturn ever since the war started. So part of the strategy is being in the now, being in the know. Know what's going on in the market. Pay attention to the news. You can come in each day with that understanding of what kind of day you think you might be having. We're definitely in a bear market, and a lot of the fat cats have been buying the dip all year long, and it hasn't worked out too good for them. So we're getting down to the point where I'm going to show you on a few charts where I think it might start getting interesting for us to kind of have a soft landing. But we got to remember, being in the now, you've got the geopolitical problems, you got the political problems in our United States, and then you've got a war. And then you've got, all the tension that's built up around the world. So the world's in a total recession right now. I truly believe it all started with us and the green energy, pumping green energy, forcing other people how to live. I'm not the kind of person to want to push my lifestyle on someone else. And I think that's what the United States have done to create all this chaos in the last couple of years. So I'm being in the now. I know it's not very good out there. The second part of the snake is learning a strategy. Build a strategy. I built mine on pullbacks and chart patterns and moving averages. So throughout the years, I used moving averages. I used the 50 and the 200 SMA. And then added on later down. Also started learning chart patterns. So we are in a bear market, but it's a bull bear market. I mean, the bulls are getting their chance early in the morning, and then the bears come in and bring it down. If that pattern changes, if we have like 2 or 3 good days that the bulls are in, we'd check the third day and see if that fourth day is going to be bullish or not. If not, we'll pull back. I have a 3-day rule. when I do swing trade to strategy. So the first part of the strategy, this is the strategy itself. You have a trend that goes down. You play the vertical channel, and then it forms some kind of, gets out of that box. It gets out of that trend box. Once it pops out of there, you usually have a pullback of some sort and maybe a breakout. But most cases, in a lot of cases, they develop some kind of flag. And I'm going to show you these flags that come out of this box. This is a down vertical box. You notice them almost every day in every chart that you look at. That's when the buyers exit the trade and the sellers come in, and the puts are in there. So they start selling, and the people will bring the market down, and then it eventually finds a bottom sometime that day. And then it breaks into a pattern, and then you have the breakout. Now I have the moving averages on here, and I did a video this weekend. I'd like for you to go back and watch it. It's how to work the moving averages, and there's a lot more to learn besides what I showed you in that video. And if you watch me live every day on YouTube, I'll show you how to use them trades and how to look for stocks. But I'm live every day, and then I do little update videos of stocks that I think are going to break out or pull back, and just like little 5-10 minute clips. And so it's good to subscribe, ring that bell so you get them updates, hit that like button, and make comments. I want to hear if you have something that could add, or you think that maybe it's going to be a more of a pullback on a stock that I'm looking at. I'd like to hear about it. So the patterns that one has to really learn, and I've got candlestick patterns. I got what you call a beach trade early in the morning. So you can copy and paste this down, or you can Google bullish and bearish chart patterns, candlesticks, and you'll get the beginning of a lot of these breakouts. Now, I've studied these every day. I use this as a reference tool. If I'm looking at a chart and I'm starting to see a reversal, and I want to look at that first candle that comes up from the bottom, and I want to see if it's bullish, I want to see if it's bearish. If we start to go sideways and we have a bearish candle, you know, some of these are bearish, but you'd think they're bullish because they're going up three. That's called three white soldiers. Three bullish soldiers, but it's in the bearish flag pattern because they like to pull back. But if you know what a three bullish soldier is, it could be a continuation run for the rest of the day, but they do pull back. So that's a scalp. That's a 3-minute scalp. You're in and out of the trade, and bam, you're done. That's called the beach trade. And they pull back. I mean, there's different kind of hammers that you got to look at and do your studying on them. But these are all three candlestick patterns. The next one is the continuation of some of them patterns. Like the bearish engulfing. You can trade, like I always call, three black crows. Three black crows are almost in every one of these. And you can learn how to trade them. I scalp off these three black crows. Sometimes they'll bounce up to that third candle and pull back just a little bit and then continue on the run, just like you have right here. This is called a morning star. You'll see it at the bottom of the candle. That's a bullish breakout pattern. This is called the ascending triangle. These are all patterns that you need to study to be successful in this trade. So copy and paste this if you can, and save it. You can go back once it's recorded and pull it up and copy and paste it if you like. I have like three soldiers that come in right here, and then you got the bearish rejection of that little candlestick right there with a tweezer top. Then you got your crows that come in here later. Now this thing can stop right here and bounce right back up and move back up. Bullish rejection. You got the three red crows. I call them three black crows. You got the evening star at the top, which is a downtrend. Any kind of doji. This is one of my favorite patterns. This is an ascending triangle. They've got a bearish breakout on this, but I don't know about that. I have to argue with this one right here. That's one of my favorite bullish patterns. A lot of times when you break a resistance, it becomes support. So if a stock breaks out past resistance of maybe a triangle of some sort, like this right here, this is an ascending triangle. This is the one I'm talking about. I don't know where they come up with that one. I'm going to put an X on that. But what was resistance, and you're in a trade that breaks out and it pulls back on you, if it holds that resistance level, which was an old resistance, it now will become a support and it'll bounce up off that. A lot of people get scared when they start to pull back and they get out. They don't let it test that old resistance. 3 white soldiers, pull back, and then there's your continuation run. You got to watch them candles when they reverse. If they turn into a spinning top, a doji, an inverted hammer, it's a good idea to keep an eye on them. Always study them candles at the bottom. Here's your 3 white soldiers. 3 white soldiers break out, and then you got another 3. They'll pull back, another 3, stair stepping all the way up. There's a bullish rejection. I don't know. Some of these are just kind of messed up in a way. Now I believe this one here is a bearish flag. Just always remember them top candles are tell you the story. If that wick's way above that candle, and you have the body down here, you could be having a nice little rejection and it'll pull back. Always keep them on study. Now here's your patterns that I really like. This is called an inverted head and shoulders. Copy and paste this. This is the one you really want to know. This is the one you really want to know. You got the snake coming down. It creates an inverted head and shoulders, and then you have the breakout. You have a bullish flag going up to the up position. It pulls back into a snake, and then you can have a breakout. You have my favorite ascending triangle. Breakout, breaks out, pulls back to support, which was the old resistance, and then carries on and continues its duty. The next time you want to break that last resistance, that when it pulled back, you want to try to break that double top. It's a bearish flag. It's called a head and shoulders. Now you can trade these too. You can trade them in a put, or you can bounce off support, have a target with some consistency of consolidation on the previous day or the previous week or even the previous days or hours or whatever. I'll show you the chart timing frames that I use. You have 3 black crows. It runs up into a bear flag. This is a bear flag. Some think it would be bullish, but you get ready because it's going to have another downturn. Coming up from the top, it starts to move up. That snake's not going to be too good for you, but you can play it within the channel. Descending flag is very bearish. You got a falling wedge. This is one of my favorite trades out of the snake. I love it. You have the snake, it forms a falling wedge, and bam, runs back up. So you want to try to catch them when they're squeezing or maybe at the triple bottom. But who knows, it might bounce off the top. It might bounce off a double bottom and continue up. And I'll show you a couple tricks about that. Here we have a symmetrical flag. Coming up from the bottom, forms a symmetrical flag. It's a 50-50 chance that things going to break out to the upside. One of my favorite patterns is the double bottom. The double bottom and the triple bottom. You got a snake, it breaks out of the channel, comes back and joins a double bottom. If you get a higher low, say this body of this candle right here, just a little bit up from the double bottom. Now note very, very close on this. This double bottom right here. If you notice, a lot of these trend lines, a lot of these patterns are done on the body of the candle, not the wick, the body. That makes the difference of everything. That guarantees you that you can get out of the trade before others. Every one of these is done on the body, not the wick. So always remember that body is the most important. That's the closing of the candle and the opening of the candle. When the candle opens, that's where it starts. It might dip down a little bit from that, or it might close with a wick on top of it, giving you some kind of indication that you might be in for a sell-off. Very important that you know that. Here's a rising wedge, which is a bear flag. So you're coming up and you think, oh man, this thing's really going to break out and look nice. No, it's not. It's a bear flag. It's going to pull back. You got a symmetrical triangle coming from the upside to the downside. It's giving you a chance to get out of the trade before it falls. And then you got your double top. You got a triple top. If you hit a triple, I always get out at the double top unless it holds this support. Now, I always get out of a triple top almost, unless it's in a pattern. Triple tops are hard to break, but it's giving you two different chances to get out of that trade. So those are very important. Copy and paste this down. It'll be very, very helpful when you're wanting to learn the snake. It's all about patterns, and it's all about moving averages. I think that's about it with that. Any questions? Is there any questions about that we need to learn patterns and how to trade them? We need to study them. You can be in and out of a trade. If this is on a minute time frame, you could be in and out of a trade within 10-15 minutes and make $300 or $400 on a contract if you're buying them contracts for less than, 10 contracts for less than $1 or $1.50 or whatever, I'm buying 10 at a time, and if they get up to a certain price, I'll buy 5. And if it dips on me a little bit, I know that I'm in a good strategy, and 9 out of 10 times it's successful. So I'm not always adding on, but if I think it's looking real good, I'm going to throw another 5 contracts on there, and I'm going to increase my value and lower that average price, which increases the value. I could, let's say I got in at $1, it dips 15 cents on me, and then it starts to reverse. I'm going to add another 5 right there, or another 10, and by the time I get up back to where I got my entry at, I'm up $150. So I can go ahead and get out of the trade at my original entry, or I can take and run it up, and then I'll be doubling what I was bringing in, which I average about $300 a trade on average. And I do that 5 or 6 times a day by reading these patterns. For example, like Tesla. Tesla has the snake right here. The moving averages are telling me when to take the trade. I could buy a put and run it down until that breaks out of the channel, or that 9 EMA starts to move up. Then once it crosses the 21, the 9 EMA crosses that 21, I'm good for gold, and I hit it to the 200, and I'm out of the trade. It's that simple. And this is in any time frame, but I use the 1 minute because I want to get in and out of a trade within 15 minutes. A day trade can only last 30 minutes. I like to stay in them at least 15. If it ain't working in 15 minutes, I start to get a little bit shook up. So I can make $300 every 15 minutes if the setup is there. We had a triple top, you exit the trade. You have a double top, you exit the trade. Pulls back to the 50, and bam, you're back up there on a triple top. So you've scored 1 trade, you scored. Maybe you got in the bottom down here, but that's not a good idea. This is a higher low. Once it breaks out, this here chart is called a TTM squeeze. Now I have it down there in the content. If you have TOS, you're welcome to it. It's a Fibonacci setup. So it automatically has the Fibonacci's on here for you. And all you got to do is look at them fibs. It's not a lot of lines. It just from 0 to 1. You'll see that later. As you see, snake formed a pattern, squeezed, and broke out. You know what a squeeze is. That's when you're getting down to the final nitty-gritty. It's when it starts to collapse. That's when it starts to go into the corner. and then it breaks out to the 200. So I use these moving averages to get in and out of trades. Say the 9 crosses the 21 and it starts to open up, the alligator of the mouth starts to open up, and then she rises up to the 200 and you get out of the trade. Once it hits that 200 or once it hits the 51 EMA, get out of the trade. You could have maybe took it right here on the pullback of the high or low, which is the best time to get in this trade, when it pulls back. Once it breaks out of the snake, it's got to get your interest. You don't chase it right here. Let it come to you. It will always pull back. You have 3 white soldiers, and what happens on 3 white soldiers? It pulls back. 3 white soldiers, 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 it pulls back. So if you're scalping this trade and 3 engulfing candles get in there, hit that sell button. Take that profit. Do it. Once you're consistent and you start learning the patterns, you can stay in longer. But I can't. I mean, you've got to get out of that trade. If you don't, you're going to get stuck. You got to take that profit. If it's 1 trade a day, that's $300 in 3 minutes on a 1 minute time frame. If you're buying 10 contracts at $1. So let's the moving averages. I've got the 21 SMA. I got the 50 SMA. I have the 200 SMA. I have the 9 EMA, and I have the 51 EMA. These moving averages have different purposes and different reasons. The 9 EMA crosses the 21 for an entry. The 9 EMA crosses down the 21 for an entry for a bear market. For example, you got the 9 crossing the 21, it's going to come down. As long as that 9 stays under that 21 moving average. You're getting ready to break out of the flag. If that 9 crosses the 21, that's your time to maybe take the trade. But again, I've got to repeat this. They'll always come, not always, but they'll come back. Now what I like about a flag like this, if it breaks out the 3rd time, that's go. I mean, that's great. You want to watch the triple bottom and the triple top on these flags. The 3rd time is the charm. If it don't happen the 3rd time, you're taking a bigger risk. I'm not saying it can still break out, but that 3rd time means everything. Everything's in 3s with me. I date 3 women. I got 3 beds. I have 3 pairs of shoes. I got to get out of a triple top. I want to get in on a triple bottom. I want a 3-day run for a swing trade. Anything like that. Everything comes in 3s. The 9 EMA tells you to keep if the stock is bullish or bearish. The 9. For example, I've got the 9 on here. Some people use the 8. Some people use the 11. But I have the 9. Now, if the candlesticks are below that 9, we're staying bearish. If they rise above that 9, we start getting bullish, as you can see. As long as you stay above that 9, you can hold that trade and keep riding it up to the 200 or whatever moving average is next to hit. But once it starts to break below it, your results, in most cases, are going to end up like this. Now you can take the trade off the 50. You can take the trade off the 200. Those are my 2 leading indicators. You can take the trade off the 51 EMA if you're looking at the 1 minute time frame. The 51, the 200 SMA, the 50 SMA, and the 51 EMA are great for entries and exits. Let's say you wanted to take it off the 51 right here. and you missed the flag. You see you had a double top on the 51 right here, and then it breaks out, and you want to chase it, but don't. Let it come back. Let it bounce off the 9. Let it come back and bounce off the 51 EMA. Let it bounce off one of these moving averages. But my favorite ones is the 51 and the 200 if they're down below. There's bounced off the 50 right there. So you could have took that trade. It started consolidating. You got a bull flag. All these wicks down at the bottom of these flags are telling you something. They're telling you something. They're saying it's starting to consolidate. You got a hammer. You got this here big body candle. Rolling pin. Runs up to the 9. Pulls back to the 50. There you got another bull flag. Boom! Keep an eye on them reversals. Learn when you're looking at a chart and it reverses. Learn. Teach yourself. Take time out and study what candles are causing these reversals. Same as on the top. There you got a bear flag. See, the wick is on the top of the body. You got a bigger wick up here. It's telling you something. You got a triple top in these flags with big wicks on them, and then boom, you got the big boom down. So pay attention to them wicks. That will really help you learn this strategy. So let's go in summary of what we've learned here. How to work the moving averages. I've got a video. You can go back and watch it. And we've got the SMA, SMA 50, SMA 200, EMA 9, and EMA 51. The 9 EMA and the 21 SMA, when they cross each other, it's either going to be bullish or bearish. When the 9 crosses down the 21, it's bearish. When the 9 crosses above the 21, it's bullish. When all the moving averages start to cross the 50, when these two, the 9 and the 21, cross the 50, you're more bullish. When all three of them two cross the 51, you're more bullish. But once it hits the 200, you get out of the trade. Now this happens in a day. It can happen on a swing trade like this. These are daily candles. It can happen on an hour time frame, and it can happen in a 1 minute time frame. And I'll show you the equivalence of that. For example, Tesla. We'll take it to the 1 day. Nice little hammer. I called this hammer out Friday. I said, get ready, folks. We're going to have a good day, because that's a very bullish pattern. Now, you got to be in the now on this, because, deliveries are coming up, and I don't know if they're going to be that good. So you take it, you run it up to the 200, and you made $300 right there. It probably went up 10 cents. You got 10 contracts, maybe you made $100. And you get out of the trade. Once it hits that 200, you get out. That first few minutes of the day, if that 200's sitting there, then take the pullback. You got the 3 black crows. Look at the reversal of the candle, and here we are again. We got a dragonfly. That's a dragonfly doji. Dragonfly doji. And that thing will bounce up, hit the 200 again. You can get out of the trade within minutes, and you're done for the rest of the day. And you can go ahead and take care of your family. Here we have an ascending triangle. You got what I showed you in that earlier chart. Ascending triangle. You've got, comes up, starts to get higher lows. You're consistent here. Tweezer top, tweezer top, tweezer top, tweezer top. Then finally it breaks out. It shows a little bit of evidence. It's going to break out, but it comes back. See, it comes back to that old resistance. That's now a new support. And it bounces off that, and boom. You could take that trade once it establishes these two bottom candles. Maybe you ain't took the trade yet. It comes up and then pulls back one more time with a higher low. You can get in it right there. And that option that was probably $1.10 up here dropped to 90 cents right here. Bam, you take it on that third dip, then run it up, break it out. Learn these patterns. This patterns right here will make everything. Every one of these leads into a snake. Every one of them comes from a snake. You got a snake here, 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 you got a snake there, double top, get out of the trade. So that's called an ascending triangle. 1, 2, 3, 33 times the charm. Bam! Once it breaks out, you can kind of do what you want to do. But look, it pulls right back to that old resistance. That old resistance now becomes support. Here you got a triple bottom. 1, 2, 3, bam! Everything comes in threes. The charts aren't that hard if you understand that they will come back to you. You don't have to chase nothing. If it doesn't come back, don't trade it. Let it set up. But I've been watching these patterns for over 19 years, and I've learned a lot. I used to be the one that I'd lose $150 and I'd be crying and screaming. And then throughout the years, I realized that everything just breaks out and it comes right back. Everything breaks out and comes back to me, and I can be able to take them trades if I understand these patterns. You got a snake, you got a breakout, you got a double bottom, boom, to the 200. Every trade, all of them, 99.9% of them do this. They fall into the channel. You can I take the trade here, 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 and here, and here. Once that established a channel, I can trade a bear flag all day long. You're going to have to pay an arm and a leg to learn for someone to show you this stuff. I'm doing it for nothing. So you've got the triple bottom, breakout, boom, to the 21. Then you got the 9 crossing the 21, and bam, 3 white soldiers, and you're out of the trade. So you took it, maybe you were in it right here, or you waited for the double bottom. You don't have to chase, I'll tell you that right now. Well, let me do it different. In fact, let me do this. I'll just leave this like this. Snake, breakout. Okay, Jim, it's broke out. Then ask yourself, what would Jim do? He'd wait for it to retest. And then he'd look at the candlesticks and say, wow, we got a bull flag right here. We got a doji. We got a spinning top. Getting ready to break out. Double bottom. Snake, breakout, pull back, boom, to the 200. It's four. You got the snake, you got the breakout, you got the pullback to the double bottom, boom. You got the snake, you got a breakout, maybe you had a pullback to a triple bottom. Maybe you got in the trade right down here at the double bottom, but the consistency of where that broke out, or maybe pull up the 5-day chart. 1, 2, 3, triple bottom. You got a double bottom break right here. Not the one that was in the channel, but the one that was the day before. So look at the day before previous low. Get a confirmation before you take the trade. So we got the snake. The 9 crosses the 21, crosses the 51, runs up to 200, and get out of the trade. People get excited when they see them crows. Oh no, it's going to go higher. It's going to go higher. It's going to go higher. Now you get out of that trade on the triple count on third white soldier, and it'll come right back to your previous entry. So you got in this at $10. You got in this at $1 a contract. You bought 10 contracts and you spend $1,000. It runs up 60 cents in a matter of 5 minutes. That contract, it runs up 30 cents in a matter of 5 minutes. In that contract, 10 times 30 is $300. 20 times 30 is $600. Pulls back and you can take that trade again. But it's going to eventually it's going to break down, and maybe it's going to fall back, or maybe we're in a bull market and it's going to continue on running. But now is not the time where you're going to think that you're going to be breaking a lot of resistance levels, because there's a lot of bears out there, and our economy is not in great shape. I've been trading 20 years. This now is worse than what it was back during the financial crisis. And the Dow went from 14,000 to 6,500. There was no war going on. We weren't being threatened with nukes. This all happened within the last 2 years. It's a totally different economy. It's a gig economy. The country was shut down. My business was shut down. I mean, I barely survived for almost a year. If it wasn't for trading, I probably wouldn't have. But it was some of the best opportunity to buy the dip. And that's where we are right now. I still think we have more of a downturn coming. Not until the government figures out that this country's in a mess. Right now they think it's great. I don't. The feds are making a big mistake right now because we've not established a good economy. They should have raised the rates way before this. Maybe during the Trump years would have been best, when the economy was booming and people had jobs and everything else. Now it's been total chaos. It's just not the right time to be raising rates. But they're doing this on purpose, and they're giving us plenty of opportunity to buy the dip. I'm in the now, because I've watched this market every day for 20 years. Every day I've sat at this desk for 8 hours a day. There's not a person out there that can tell me any different, because I've been through it every day. I've been through the financial crisis. I've been through Kuwait. I've been through Libya. I've been through Afghanistan. I've been through all that. And hardly any of them wars affected the market until this one. And it's because of sanctions that's caused and crippled the world economy. So just pay close attention to that. So you got to be on the bear side right now, but you can still play it bullish if you learn how to do this snake. The trends are coming in good and strong, and the spreads are wide. And some of the biggest profits can be made right now compared to when you're running a bull market and you're running up. You won't make $200 or $300 a contract like I've been doing. You won't make $120 a contract like I've been doing. There'll be a lot less. They'll be in $30 or $40 if you're lucky. So now's the best time in fear, but you got to have a strategy. And I think that's about it. I got to see if I can come up with something else. Go back and watch that video on the moving averages. Watch these moving averages. See how they break out. But always remember, snake, breakout, pull back, double bottom, triple bottom, a falling wedge, a descending triangle or ascending triangle, maybe even a descending triangle on a triple bottom. once it's out of the wedge or out of the snake. And they always come back. Always, 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 always. So if you're up in a trade and you're scalping these options, or you're doing however you want to, every chart will look the same. I'm going to pull up a couple charts, and then we'll ask anybody have any questions. I personally never worry about taxes. I never have. I've never worried about, never worried about taxes, and I never worry about what profit I'm taking. I only worry about the losses that I'm going to get. I never worry about the commissions. Unless, they're way too high, then I'll look for another platform. But no, I don't ever worry about taxes. As long as you're making 20, 30%, at least 15 of that's got to go back. So taxes is the last of my worry. What I've got to worry about is making sure that I can get in a trade and take profit. You get statements, you can just hand them over to your accountant, and they'll take care of business. I paid a lot in taxes, but I've made a lot more I make $1,000 a day, make $2,000 or $3,000 a day. You're going to have to pay taxes on it, capital gains, and it all depends on who's president. I've been fighting for the capital gains tax to be cut off so we can make money. I remember when I first started trading, they had the financial crisis, and the government came in and they put a PDT rule on everybody to where you had to have $25,000 to day trade, and that really hurt a lot of people, a lot of beginners, a lot of retail traders. Now you can get around that, but back then you couldn't. And it was real hard. We all said, damn, this thing, this rule sucks, man. You're allowed 3 trades a week, 5-day period, and that's it for scalping. And then if you swing trade it and held it overnight, you could wake up the next morning and everything would be gone plus. And that happened to me many a times. So I opened up 2 or 3 different accounts, and I trade with 3 accounts now. And back then I traded with 3 accounts, and one account I could do my 3 trades, and I'd go to another account, do another 3, and I'd go to another account and do another 3. And I broke the rules like that. So taxes, I don't worry about too much, unless I've been at it with the IRS. I'm going to worry about taxes now that they're going to add 87,000 employees, which I don't think can happen. I don't think America has that many smart people. But that's another thing we can get into later. You're going to get audited, no matter who you are. I've been audited twice. And that's both times with my business. So I've never worried about commissions. I've never worried about taxes. I used to pay $10 to get in a trade and $10 to get out through Scott Trade. Now I trade mostly with Tastyworks, and it's not that expensive. Especially if I'm making $1,000 a day. And then my commissions end up $20, $25 a day. Any more questions? Mainly look for the 9 to cross the 21 if you're at the bottom for an entry. Yes. But always remember, they'll pull back on you. When that 9 crosses back over the 21. But that's the initial breakout. Let's say you had the snake, it broke out, and then you had the double bottom. That's confirmation. Just don't go off the moving average. Make sure you have a confirmation of some sort. A double bottom, a squeeze into a flag, a symmetrical flag, maybe a squeeze into an ascending triangle. You've got to have a confirmation. You need something. A triple bottom. Just don't go off the move. The moving averages are helpful to get in the trade and very helpful for getting out. But when you're in a snake, you got to look for the flag. You got to look for a triple bottom, double bottom, a symmetrical squeeze, a triangle, a wedge, a falling wedge. As long as it forms some sort of pattern. You got it. Okay, this is one of my favorite. The inverted head and shoulders is one of my favorite trades to take. A lot of people freak out on these head and shoulders, but they establish a lot of things. They establish a neckline for a re-entry. See, you got the snake. You broke out of the channel. It pulls back below the double bottom, but yet it's creating an inverted head and shoulders. This is the shoulder line and this is the neckline. It comes back and it hits the neckline. 3 white soldiers come in and hit the neckline, and it pulls back to the shoulder, not to the bottom, but to the previous low. That's called a shoulder. And then it breaks out of the triple top. Uno, dos, tres. Boom! Inverted head and shoulders. Learn that one there. My favorite flags is this one, and this one. And this one. The falling wedge. The symmetrical triangle. The double bottom. The triple bottom. All them flags are my favorite ones. These are my bearish ones. Bearish. Head and shoulders, bearish. That's my exit ideas. Learn these flags. You'll become 20 times better if you just learn these flags coming out of these snakes. Sometimes symmetrical flag will break out. It's a 50-50 chance right here. You got to know that when you get into it, see? But that's coming from a downtrend. On an uptrend, for sure. But we're talking about snakes. Maybe you're going in an uptrend on the snake and you form a flag. 50-50 chance that it's going to break out. So I think that's a pretty good lesson for today. And that's gone on for about an hour, a little less than an hour. So we got the snake, breakout, pull back, or into some kind of flag. Boom, to the 200 and get out of the trade. We've got a snake, breakout, and you buy it down here on the double bottom, and you want to get out at the 51. That's fine. You're not guaranteed that it's going to run back up here. But if you watch throughout the day and watch these trends and look at the bottoms, go to the previous day. The exit idea could be the previous high of the previous day. So the different time frames that I use when I'm looking at this, and right now I'm using 4 different time frames, and I'm actually going back 20 years. Let's use a different chart. I don't want to erase this yet. Give me a ticker, someone. Got to have a confirmation. If you have a confirmation of some sort, like this bottom right here. Here you got you got a nice little snake going up. It forms a descending flag, and then boom, it breaks out. It squeezes. Let me think of something that's Netflix. Netflix has took a heck of a beating here. So we look at the yearly chart. We had a triple bottom right down here. Boom, boom, and boom. And then it broke out. We have the 9 crossing the 21, and it runs up. Finds the next resistance, which was this high in between the gap. So that's an exit idea. It'd be hard for it to break into the gap. So you draw a trend line at 249 from right here, and you wait for that stock to run back up there again. Now this is also forming an ascending triangle. We're at a triple top. 1, 2, 3. It's going to either break out soon and run up here to the 200 and get in the gap, or it's going to pull back down and create a Darvas box. This is a Darvas box. It's a sideways horizontal channel. And you can take the trade and run it inside the Darvas box. So you got in right down here off the 50 SMA. It's respecting the 50 SMA, and you run it up to the top, the double top, and you get out of the trade. So that trade went from 216 all the way to 250, 247. You're going to tell me in 5 days. 4 days. You got your spinning top inside window right in here. You pull up that pattern. What'd I do? Get rid of them already? I had it up here. Maybe that's not the right one. Man, I can't believe I already erased them. Give me just a second here. Morning window star. You got the tweezer tops. I just love looking at this when I'm studying charts and candlesticks. It just gives me an idea of the reversals. It's a morning star right there. But that's an inside window with a spinning top. That means you're going to have a nice little bounce back up. Buyers and sellers are about equal. It breaks to 51, and then you run it on up. Get out of the top of that Darvas box, and then in 4 days, you got a nice little. This is still a bullish flag right here, but it is kind of squeezing out, and that's definitely a bear flag right there when the wick is above it. So yeah, Darvas boxes are great, also great. They're just a sideways snake, and then eventually they're going to go ahead and break out to the 200 SMA. 1 minute time frame. So here we go with snake. Let's say you're looking at Netflix and it's got a real red day. You got a watch list. Maintain a good watch list of your top. If you're new, make it small. If you're novice, make it up to 20. Your top stocks that keep good volume. So we got a snake. You got a snake right here. Drawing these snakes out. How do I draw them out? I take the body of this candle and run it to this one right here. And that's it. I stop. I don't look down, I don't look up. But once it breaks out and creates a snake, I take the first two, and that's it. I don't try to level it out or even it out. I go with the first two. We got triple bottom, 1, 2, 3. We got a big, huge engulfing candle. Damn, Jim, should I get in right now? No, wait for it to come back. Let it come back to you. Now, you've got a high or low. This is called the beach trade. It's my first trade of the day. So I develop a snake, I break out to the 50, I let it pull back, create a high or low. Once it creates that high or low, I see the 9, I see what it's doing. But that high or low is an indicator to me that we're going to go ahead and have a nice breakout to the 200. So I take the snake, break out, pull back, boom, and I get out of the trade. Once it hits that 200, I am out. I'm out before everybody else because I know that 200 SMA on that 1 minute time frame is an exit idea. I don't need to ask nobody nothing. That spinning top up there, that's a bear flag. You got a double top, that's a bear flag. You got a triple top, boom, boom, boom. Get out of the trade. Take it off the 50, run it back up, let it pull back. Everything pulls back. I mean, you got in this trade right here, and you held on. You said, I'm going to run it up, man. This look real good, Jim. And then it pulls back on you. And that could depreciate quite a bit. And then you're in the trade longer, worried, oh, should I hold it? No, you don't have to hold nothing because you got out of the trade at the 200. You had 3 different chances. Triple top, you get out of the trade. If you want to stick it out a little longer and you see a triple top, you get out of the trade. You got 5, 10, 15 minutes to hold on to this stock thinking about if you want to get out of that trade. Now I'll tell you here and I'll tell everybody, I trade one stock at a time. I can't not handle more than one. I can't do it. I've traded for 20 years. I can't do it. I cannot do it. Now, someone with a bigger brain capacity probably could. But I made this strategy for dummies. I made it as simple as I could. I know the snake break out and I know it pulls back. And that retest is everything. Once it retests and you've not built a flag or anything, you got a symmetrical flag here. Where's it at? Well, I'll show you. I need it. That's a symmetrical flag. So once it comes up to the 1, 2, and the 3rd time, boom! Everything's in 3s. It didn't come down this last time. I tell you, it's very bullish. So, snake, breakout, pull back, boom, to the 200. You get out of the trade. The biggest profit comes in the morning. That's when the most of the volatility and the volume come in. You can drag on all day long and be stuck in a trade because you got in up in here at a triple top. Now the time to get in the trade is that first hour of the day. If you can't get in the trade before 9:30, wait until noon. Wait until the fat cats come back from lunch at 1:30 in the afternoon. Once it's 10 o'clock, once it's 11 o'clock Eastern time, you shouldn't be in a trade unless you're having a real good bull market that day. Or you're in a real bear market and you're riding it down. The first hour of the day is the most profitable, the most volatile, and the best time to trade. If you haven't took a trade within that first hour, you're going to be fighting the rest of the day until the end of the day. Maybe in our market today, it's not doing very well, and these things have been selling off. That first hour is everything. If you don't get it done by then, just call it a day. Unless you know how to scalp off the 200. The 200 is a pivot point. Ends up being the pivot point on the 1 hour time frame, on 1 minute time frame. Moving averages will change around on different time frames. For example, you see the 200 as a pivot point right here in the 1 minute time frame. Some trade 3 minutes. Still a pivot point. If you're a 3 minute chart trader, then they're a little more clearer. You got that spinning top, you could take it off that and run it up here to the 50. In the 1 minute, it was the 200. In the 15 minute, you're way past all the moving averages. But you got a double top up here. 30 minute, this is what Clay Trader uses. You got the 50 to exit. You catch it off the 200. Every time frame is different. My trading strategy, and I'm scalping and day trading, I'm using the 1 minute. You got the daily. I use the 51 EMA for a support level, and I use the gap for a trend line. Depends on different charts. Nile's one that you have a big pump city going on. It hit the 200, you get out of the trade. That's a daily candlestick. You change it to a 1 minute. Let's say you wanted to take this trade and it broke out real nicely and you know it's going to have a continuation. Wait for it to pull back to the 51, the 51, the 51, the 51. That's on the 1 minute. So you get accustomed to whatever moving averages you're using, and you get accustomed to whatever time frame you're using, and the snake will work just as good. But in this strategy, it's the 1 day, it's the daily. It can be the weekly, it can be the monthly, it can be the quarter. Or it could be the 1 minute or the 1 hour. So the moving averages act different under every time frame, and they're always moving. So it's never going to be the same. But one thing that is the same is they like to bounce up off of them. Bounce off the 51 and the 200 right here. You got a golden cross. That's a continuation. So you're taking this trade and it pulls back to the 51 and you see that golden cross, you know it's going to maybe run up. So you got a triple bottom, it bounces off the 200 and then finally just gives up. And then that's time to exit the trade. Once it failed that 200 and you got the 9 crossing over the 21, get out of the trade. Because you're going to have drama. And you can read this. That's what I do. If you follow me on YouTube or you're in the chat room with us, you can watch me predict the next move. I'm always ready to call out a trade if I can look at a stock and say, okay, we had a nice breakout here, folks. On Nile, wait for it to pull back to the 200 or the 51. If it doesn't do that, don't take it. And I'll draw a little candle in here and I'll say, we're up here right now. We've had a nice breakout. I think we're going to pull back to a certain level, and I'm not going to take that trade until it bounces off this 200 SMA. And then I'm going to take it and I'm going to see if I can get out at the double top. I'll get out of the trade. I'm in that trade for less than 5 minutes, 7-10 minutes, and I made a $300 or $400. I bought 10 contracts because I know my strategy. I know how good it is. Paper trade this strategy. Once you paper trade it and you have maybe 28 successful trades, then you realize how good it is. You got a snake. You got a snake right here. So you want to draw out the snake. This is an engulfing snake. I mean, there's not much of a spread on this one here when it comes to money, but sometimes this could drop down $2 and then form a pattern, falling wedge. So here's the pattern. Check this out. That's the one I wanted. This candle right here to this candle and just drop it down. Then you got the wedge. Or a bull flag. So you got the snake, you got the wedge, you got the triple bottom on the wedge. It breaks out and boom, the 9 crosses the 21. You run it up to almost the 200. Where did I get this trend line at? Let's pull this up, see where I got this trend line on Nile. Off an inverted head and shoulders. 1478. Now I called this out in the room. I've been calling it out for a month. A long time. And that's on a different time frame. But it pulled right back to it. And that's that inverted head and shoulders right here. $14.78. I had a little fight, a little argument with some dweebs on YouTube. I have to go back a little farther. Let's go 90. On this call right here, they were pumping this stock at about $18 off this here support level. But at the time, the feds were doing their stuff. So I was in the now. Now these other kids were pumping this stock thinking it was going to go back up because the news earnings came out. They thought they were going to have good earnings. And I said, there ain't no way. We're talking about China. They're in a deep recession right now, worse than we are. They're still fighting COVID at the time. So see if it pulls back to this double bottom down here. See if it pulls back to this other support. And I alerted a bunch of kids about it. And oh man, they got all mad and fired up. They were pumping the heck out of this thing. It pulled right back to that support level. I got a confirmation of the snake. So we draw the snake in here. I'm not rushing to take anything. I'm setting alerts and I'm ready. So I set an alert. I had me an alert set off this head and shoulders. Now it's had a pretty good drop. So maybe I want to raise this alert up just a little bit, so I can be sure to get it at 15, some cents. Let's make it 16.50. So I've got my alert set, and I show the chart to these kids, and bam, the sucker was triggered. Then I called it out. Then it had its breakout after earnings. But they were calling it before earnings. They're going to call it an earnings play. They were pumping the stock at $18, $19 off this trend line. But a novice trader would look a little farther out, and he'd be in the now. And he knows what's going on. He knows the feds are bringing this market down. And he knows that China's in a recession. And he knows that Brandon is declaring war on China because of Taiwan. He says, yes, we will defend Taiwan, like, being stupid, pissing off China. And eventually, I use politics in my trading because I want to be in the now. And then it run up to resistance. You see the resistance level right in here. So I knew exactly where I wanted to get in it, and I knew about where I wanted to get out of it at this resistance. And bam, we hit that resistance, and look, we're ready. We're set up for another trade. So once this breaks out of the snake, or it breaks out and pulls back to the pivot point in the snake, I'll take it and run it up to the 200, and I'll get out of the trade. It acted like a support here. It acted like a support here. It acted like a resistance here. This is on the 1 hour time frame. So if I'm swing trading, I'll take the trade at 1683 if everything's good, off the neckline of this here, off the shoulder line of this here head and shoulders. I'll draw a trend line on it. And I'll say if there you got a confirmation off this head and shoulders. This is all about the snake. You're looking for a confirmation. So the neckline of this head and shoulders, which is the pattern I showed you earlier, there's your necklines here, and your shoulder lines right here. And we have a confirmation at the trend line, and I could take this trade and run it up here all day long. Back and forth, back and forth, back and forth, back and forth, back and forth. I could take it off here and run it up to the trend line and get out of the trade. That's a buck. It might break out, hit this, pull back, and then have its boom to the 200 SMA. But that's the shoulder line of this head and shoulders. Well, darn it, what'd I do? Get rid of it too? There's your shoulder line, and there's the neckline. That's called an inverted head and shoulders. You got a double. Remember that one. That's one of my favorite channels in catching knives. This thing right here. This is my best pattern of getting out of a trade. Okay, let's talk about some stocks. CCL and Florida. We have the hurricane. So there's definitely going to be some problems with that. When you're in a sector, let's say you're in social media sector, you're trading Meta, or you're trading oil, or you're trading steel, or you're trading chips, or you're trading airlines, or you're trading resorts. You want to be in the now. You always want to keep updated on the news. So I know that CCL is having issues, big issues. So I want to read the news. Give me a second here. Business always comes first. Okay. Now what's I talking about? CCL. I want to read the news. They just had earnings. They're expecting increases in occupancy. There's a reason why this pulled back. It was because of earnings. This is probably one I wouldn't take on earnings, knowing that earnings were going to come out, but we're definitely down here at the bottom. I mean, this trade's looking good to buy right now. So I want to pull up the year chart. I want to be in the now. I got to look at the news before I take any kind of trade. We're going to clear this chart up. We've had a huge knife, so I got to go back in time. I want to go back 3 years. I want to find the 3-year bottom. This is back during COVID. So this thing's way oversold. Because they closed down a lot of they closed down. I mean, these things weren't running for a year or so because of COVID, and it still was running up, making no money, making none. So this, I'm going to go to the bottom of this candle right here. I'm going to draw 832. I want to go back farther. I'm going to go back, because I couldn't find a support, I want to go back in time farther. I want to go back 20 years. I want to look at the weekly chart on 20 years. So that's a 20-year low. This is going to be a great opportunity for a trade. Now, what really brought this stock down, besides earnings, not hitting the double bottom, was the hurricane that happened in all the ports that these ships go to. So they're having to move around all these ports and make new travel destinations. Some ports have been torn down completely, and they're having to use the boats to bring them to the island. So they're having a difficult time because of the Hurricane Ina, or Ian, or whatever you want to call it, Ian. But we're definitely at a buying opportunity. So what I got to do now is to try to play the snake and look for an opportunity on this trade. I'm going to find a resistance level to break from Friday's high. And that's going to be right here on this head and shoulders. So I'm going to take it to the neckline, the shoulder line right there on this head and shoulders, on this pop. So I'm saying what it's got to do to become bullish is it has to break the 754. And if it breaks the 754, I'd add on and make sure I'd add on past the 768 area where that top is. And if it broke that, I'd add on and take it to the 832. You got a channel right in here for an exit idea. Just like that. That's a support, that's a pivot point, and that's a resistance. This is the equilibrium. I'll go into the 20-day 1 hour. And your next resistance would be this bottom right here at 782. It's a perfect place right now. I mean, I'd wait and see. If I was not in this trade, I'd wait until it breaks the 9 on the 1 hour time frame. And if it broke the 9 on the 1 hour time frame and held, you're going to easily run it up to the 21, to the 51, which is confirmation of this double bottom. Then by the end of the day, you should be able to take this back to $9, 972, 980, and exit the trade. So you have a good opportunity if this breaks the 9 to add on and just ride it up to the 200 and swing it up to the 200. That's still under 10 bucks. That's still a heck of a bargain on this stock. I love cruise lines. They're great stocks to trade. But we're back way below COVID days. That's how bad this economy is. The capacity is full. The ships are running at full capacity until the hurricane hit. They weren't running at full capacity for almost 2 years. Until just recently. So they're going to have good profits. I watch cruise lines every day. I watch the videos. I got people that I follow on YouTube. Because if I want to just trade cruise lines, I want to know about the sector. So I got people on here that I follow that tell me what's going on. The cruise news, cruise ships, and I follow a lot of these. I follow this guy. This guy's real good. I'll put this link in the room. He talks about the news, and he's really good to follow. I follow J and D. I follow this guy. He's a smart one, Don. They come up with little 5-10 minute shows and talk about the ships. So it gets me in the now. And the more I'm in the now with these guys, the more I understand about how good things are going. I follow these guys. I follow these guys. Every day I watch these videos. Every day. I follow these people here. They got their own travel agency. They're great to follow. They don't know I'm endorsing them, but I am. They're cruising all the time. So I'm able to watch and listen to what they're talking about. The ports and the business, what they're taking in, what they're charging more for, what they're charging less for, how much money they're making. I'm always being updated, and it's the same with anything. If I'm into oil, I'm going to watch all the oil stuff I can to educate myself. J and D in here, I follow them on a daily basis. So I got 4 or 5 people I follow, just to learn about what's going on with updates. There's my little chickadee. So I know when to take these trades and when not to. When I see a big pullback like CCL, so I'll watch it every day. I'll be loading up on this one pretty soon if it breaks out of the snake. But be in the now. We could probably easily run this back up to even on the weekly time frame, you could run it up to the 21 moving average. I run them into moving averages. And if there's a confirmation, like this bottom, there's another inverted head and shoulders. Maybe I want to run it up to the inverted head and shoulders here. I'll draw a trend line right there. 1094. That's back during COVID days. So eventually this stock's going to run back up. There's no doubt in my mind this stock, once we hit a bottom, it can only go down so far. And I mean, we're down bad. We're down below COVID days, and we're at an all-time low. So that's that. CCL. Any more questions? Go back and watch a few of my videos. I got one here that I've just done recently. It's about where I think the Dow Jones is going to go. $26,596.58. I've got one in here about emotions. how to handle your emotions and when's the best time to buy. There's my, and then I came in here and did this video because that UK news came out and I figured we'd have a nice little bounce that day, and we did. But this one here is a good one to watch. Then I got the moving average one on here just recently. Go back and watch that one. Here's another one that I've done. I want to talk about a few of the indices here before I leave and give you a feeling of the market. Go back and watch this one here. Dow Jones in the red, $26,596.58. Red October. I'll tell you why I think it's going to go there. I'm preparing for the next move. Things get bad. We get into a war with Russia. The market will go down to 18,000. We'll lose half, 50% of what we gain because of Biden. Right now, you're at a critical spot right here. Resistance level right here. Let's call it megaphone pattern. Triple bottom. Boom! Everything comes in threes. 1, 2, 3. Boom! That's a monthly time frame. So I want to talk about the 4 indices and call it a day. And then the last one to do if we're in a bear market. SPY. This is a weekly chart. I got my moving averages on here. And I think it might bounce off the 200 SMA. We did break the year low. I was counting on this year low to hold. What turned me into a bear was the Dow Jones. Let me get my watch list up. The Dow Jones broke down below this 30,000 mark, and there was my 200 SMA on the Dow Jones on the weekly time frame. So this thing can easily drop down to this 26,000, this next level right here. I turn this into a monthly. Turn it into the quarter. And in the quarter, we got the megaphone pattern. Megaphone pattern. Expansion pattern. You can trade from within the megaphone pattern. And when you're above and you broke out of the pattern, that old resistance line can now become support and bounce off this 21 SMA. Now this is on the quarter. You got a big old inverted hammer right here. So we could have a nice little rebound back up to 30,000. Or we could drop to the pivot point in this megaphone. That's where I got my next prediction. That's the Dow Jones. The SPY. You got to look back and look for patterns. Same thing here. Megaphone pattern. And we touch back to the top of that resistance level. So that's a solid resistance. And if that holds, we could have a nice little bear rally for a 3-day upside trend. Now we just got through of a week with 22 Fed speakers. Maybe we don't have to listen to their mouth for a week and we can get some kind of decency out of this market. I want to be in the now. Fed speakers are just killing this market. And it's just, I don't think the timing's the best in the world at all. They think that these employment numbers are great, and I don't think they are. I know too many people that have to live on a double income to make it, especially if you're single, even if you're married. you still both have to be bringing in an income. And some of them work 2 jobs plus the wife and husband just to pay for everything. But so we're close to a support on the quarter. Now, if I bring it up to a year, it bounces right off that trend line. So we could have a good possibility of it coming back up and hitting these resistance levels, which was the year low right there at 262. That's the June lows that these fat cats were wanting to bounce off of, and it didn't do it. So we had a week of, just constant, no matter what happens, we're going to raise the rates and make you suffer. Just the wrong time to do it. I was watching economics back when Carter was in, and I was only 17, 18 years old, doing acid and mushrooms. I didn't really care back then. But once Reagan got in office, I had to work. So I was kind of concerned about the economy, and he turned it around by cutting taxes and allowing the private sector to do their business. And that's not the case. We got the government dictating what to buy and what to eat and how to treat each other. Back then we were dancing and singing and having all kinds of fun. There was no tension at all. Now there is. So it's a lot different than it was back in the 70s and the 80s. You just have to be in the now and know how to trade the now compared to what it was like back then. Don't want to be a Debbie Downer, it's just the way it is. So we got the QQQ. Pull up that 3-year weekly chart, and we broke down below the 200. So this thing can fall down to the next channel right here at 255.20. I wouldn't be surprised if we have more pullback. You got the IWM. We definitely are hitting a double bottom here with a higher low, so we've got a snake. We'll clear this up. Go to your drawing tools. Draw your snake. There's the snake. We'll break out, pull back to the topper channel. So that's a support level with a double bottom. Now we've got a bull flag right here. So it's going to be interesting to watch IWM come tomorrow and see if we bounce off this a little bit and bring this back up some. I'd say we have to break this resistance or hold this support on this double bottom right here. And that's where we pulled back to on the body of that candle. So this is a perfect looking snake. Come in here Monday. Snake, break out, pull back up to the 50 and get out of the trade. But I don't know if it's going to go that high. I'd take it to the 200 on the weekly if we have a good 3-day run. And that resistance level will be right there at 178 from 164. And that'll be a 3-day trade. If it holds this area, this gap. See gap? We filled that gap and we held support. So that's a good pivot point on the weekly time frame. That's called a pivot point. A pivot point is a place that tells you if it's either going to be bullish or if it's going to be bearish. And the odds of it being more bullish than bearish are a lot higher because that's a hard support. It's a very hard support. But if you break down below the hard support, it could be a nice drop down to this here channel right here at 150, 152 off this inverted head and shoulders. They don't have to look perfect, as long as you get some kind of feeling of what they are. But yeah, I mean, that's, if that holds, that's good. If not, we're definitely going to drop down to 152, and I'll buy a put, and I'll take it down to 152. The QQQ, and then I'm going to tell you what to play on a bear market. We're broke below the 200, so that's savage. That means we can drop down to this lower candle right here. And at 261.54, if that doesn't hold, we'll take it to 255 at the bottom of the channel. This is a Darvis box. What's Darvis box is a sideways channel that has a support and a resistance level, and they break out on the triple top, and you get a higher low, and bam. So this thing could pull back to that pivot point, which it broke, would pull back to this bottom candle right here in the Darvis box. And here's your Fibonacci setup. That's approximately at 61.8 from the year high, the 3-year high. And then there's your 3-year low down here at the Fibonacci. So this is an automatic Fibonacci setup, and you won't find it anywhere but from me. And I've got the link down there in the bottom of the content. You can load it up on TOS. All you got to do is add the 51 EMA. And then the last one I want to talk about is going to be the SQQQ. You come in here tomorrow and we're bearish, you can run this stock up like we were Friday. I took this trade, and bam, man, that snake came in Friday and just kept selling and selling, and found leverage on the SQQ and run it up and got out of the trade at my final resistance level. This was on the yearly chart. That peak right there on that candle, and then we busted above it. So now you got a gap right in here, take it to, and we're about to that one. And if it keeps being bearish, we're going to have a double top at 66.23, 66.15, 66 bucks. If we still are selling off and being bearish. But tomorrow's Judgment Day, and I tell everybody that the market has a very short attention span. Every Friday, every Monday is a new day. Every end of the month, every first of the month is a new day. Like that's one heck of a September. And I'm calling for a red October. So I still think we got more to go down if these feds keep talking their gibberish. It's not fair to the middle class and the poor, but it's real fair to us if we know how to trade the market. So I think that's it. I hope everybody got something out of this today. You can go back and repeatedly watch the video. The PayPal link down below is not hooked up right now. It's at the end of the month and I need to make a new one. But if you feel like watching the YouTube or joining the channel, it helps out the scanner. So come back in a week if you want to donate, if this helps you out. I don't ask for it, but I definitely don't want to pay for the scanner if I got to be on here 8 hours a day live on YouTube. And there's my social media accounts are down there. You can watch them, get my alerts, and then I got that chart in there that you can go ahead and copy, paste if you have TOS. And I've just got through making me some nice fajitas, and I'm gonna go put them up in the fridge. That's what I'll be eating next week for lunch. I got some hummus for snacking, and I think that'll be it. We're gonna have a bullish bearish market. I think we're going to consolidate a little bit now after last week, all the Feds talking, and we could have kind of a leveling out in the market and maybe a little 3-day bounce. It all depends on headlines. I was listening to CNBC, and I've listened to them for year after year after year, and I'm not liking them like I used to. They got a lot of rookies on there that kept saying buy the dip, buy the dip, buy the dip. We're here to buy the dip, buy the dip, buy the dip. They've said it all year long, and I've said you don't take their advice. They're long-term traders. They look 2 years out. They're fundraisers. They're fun. That's the way they trade. Billionaires trade like that. And they're pumping Meta at 180, saying it was going to 450. And we'll talk about Meta. Meta's been nothing but gone down. They keep saying buy the dip, buy the dip, buy the dip. Because they're long-term traders. I know a guy that buys stocks, and the stocks he picks, I would have picked 20, 25 years ago, but I wouldn't be picking them now. And they go down on him, and he'll just add on. But he's got millions of dollars. He got $1 million in a company that's at cheap, inexpensive. It's half the price when you first got in the trade. And he just keeps adding on, adding on. Eventually, them billionaires cost average down. They tell you not to, unless you're a long-term trader. I don't tell anybody to do it unless they know how to trade. I know how to trade. I know how to read charts, so I can do it with a good success rating on a day trade or a scalp, because I can read the charts. I know we got a snake, breakout, pull back, boom. Snake, breakout, pull back, snake, breakout, pull back, boom. Snake, breakout, pull back, boom. I just know that happens. So go back and watch the emotional video I did this week about your emotions. If you're having a hard time, there's a lot of key factors in that video that will really help you out. Because I've been through all the emotions. Jesse will tell you, he watches me go through them here live on YouTube. He's here every day watching. I can't trade with my shoes on. I gotta have something in the fridge where I can run and get to it real fast. So I think that's about it. Before I just keep talking and chatting and saying stuff that I don't need to say. I really do love doing this. I used to, when I was with I Love Stocks, I'd get on here on Sunday and just talk about stocks and stocks that you liked, and would show you how to take a trade or where I think if it was good. Or I traded penny stocks for years. My best success has been the last year that I've traded the indices. I've traded the SPY every day. I've traded the IWM. I've traded the SPX, and I trade the QQQ every day for a whole year. And I've made more money this year than I have for the 18 years that I've been trading. I don't really want to go back to trading penny stocks until we get a good, decent market. I don't want to swing until we start to see a good uptrend. I don't want to hold more than one stock at a time in this market. I can make plenty of money just trading Tesla. I can trade a watch list of 5 stocks and leave it alone. And just as long as they're my 5 favorite stocks, I can make a trade off every 5 in a week period. I can make 2 or 3 trades off that. My favorite stocks are stocks that I know that are going to be key components in the new gig economy, which is tech. So I've traded the heck out of SPY every day. The SPX, I'm just started to trade it, and spreads on it are huge. They're just so easy. I've been trading too long to know what's hard and what ain't hard. You'd get in stock and have great earnings, and bam, things just drop. FedEx. I mean, unbelievable how cheap FedEx is. And Christmas is coming around. This is always my Christmas trade. Always. So this thing dipped down to 140, and I pointed it out. I said, man, this thing's inexpensive. We were at $200 and we dropped all the way down here. This ain't right. This ain't right. This ain't right at all. Go back 3 years and we're at the neckline of this Head and Shoulders. And we pulled right back to it. Now look what we got. We got a spinning top. We got a doji. That's a reversal candle to the upside. This stock is ready to go. This stock is ready to go back to this here engulfing candle right here and stop at 160. It's ready to go. FedEx. That's on a weekly time frame if you want to swing a stock. I want to get in this trade at a good price, Jim. Well, let's find the neckline or the shoulder line to this Head and Shoulders. Everything's a head and shoulder anymore. So if I want to take the trade, I want to take it off the shoulder line right there. I'd have an alert set, and we're right there right now, bouncing off the 51 on the 1 hour time frame. There's no other moving averages below this. Pretty sure this is going to bounce up and break resistance. It becomes very bullish if it breaks this double top at 153, and that'll easily run up to the 200. I have a confirmation right there at that targeted price that I mentioned a little bit ago with a 200 SMA on the 1 hour time frame. So that's a trade. I want to take this trade off the neckline, off the shoulder line, one more little pullback to 147.14, and I want to make sure and run it and swing it to 153. And if it doesn't break the 153, I want to get out. If it does break the 153, I'm going to run it up to the 200 SMA. Meta. This one's going to be worth money. It's just down too much. We did have an ascending triangle, and it turned into a symmetrical flag. So we're at a double bottom right here. This is the shoulder line of the Head and Shoulders. It could drop down to, this is the neckline right here. This is the shoulder line. This is the neckline. This here is the triple bottom right there. So you got that support, and that support. If we have a green day Monday, you'll easily run this stock back up to the top, maybe up here right around 139. Maybe back up here to this triple top. That's what I was calling. And that runs right into the 200. That's what I called here on this day, Friday. So we're going to make it to the triple top. We about did. And I would have got out of the trade. Now you had a pullback. So this thing can easily run back up and complete its job. You have a snake, breakout, pull back to the double bottom. Boom! Snake, breakout, pull back to double bottom, boom, back up to the 200. Apple. I remember Apple. Apple can get back to 120. That's when Buffett bought it. What's this 137 represent? Well, let's find out. It represents the shoulder line of the Head and Shoulders. There's your shoulder, and there's your neckline. Right there. How I take a trade like this? Let's clear it up. I'll show you. So you got an inverted Head and Shoulders. You draw a line from here. Run it down to here. When it comes back and it retests that shoulder, and you want to take the trade, wait until it breaks resistance, and bam! Me, I'll take it down here at the shoulder. I'll be in the trade before you get there. But they don't do that. Traders don't do that. They've not watched these charts over. I've done over 1.5 million charts in 20 years. I've seen it over and 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 over again. So we got 3 black crows setting up. 3 black crows right here. Getting ready to see that thing bounce back up off the shoulder line. So I'm calling this trade out. Apple. I want to see Apple hold the shoulder line of 137.11. Right now at 138.20. So if it happens to pull back to that 137.11, which is the shoulder line of the inverted head and shoulders, I'll take the trade and run it up to this first candle and get out of the trade for a day trade. I'll look at the 20-day 1 hour. I'll adjust my trend line, my resistance line to the bottom of that there candle at 140.87 and get out of the trade. It runs into the 21 SMA. So I buy it at 137.11. If it dips there, I set an alert. Always set it above your number. When that alert triggers Monday at 137.43, I'm going to have my order ready, and I'm going to run it back up and get out at 140.87, or maybe top of that candle. But I want to take it to that 21 SMA and maybe run it up to the 51 on the 1 hour time frame. If it keeps running, we got a great week. I'll take it back to 150 and hit the 200 and exit the trade. Disney. These are all my favorites. I look at them every day. We got a double bottom on Disney. Okay, watch this. You want to learn how to draw a snake. We break out of the snake here at 96.15. I want to run it all the way up to the 200 and get out of the trade. I want to look for a confirmation. Right there, the double top. Take it to the 200 and get out of the trade. Citibank. Banks took a hit. We're in the snake. We pulled back to the pivot point in the channel. We got a double bottom. Perfect setup. This thing breaks out past the and gains respect Monday on the 9, and it breaks resistance. I'll take it to 45 bucks and get out of the trade. I'll hit my 200 SMA. Bank of America. Double bottom. Got a snake. Kind of a tough one here. It's consolidating. I'll run that channel right there. We broke out of it. We pulled back. I got a double confirmation of a double bottom right here. I do have a support level for 28.86. Wonder why. Pull up the yearly chart. Where's your answer? It's a double bottom on the yearly chart. So I've got a snake, breakout, pull back, boom to the 200. Snake, breakout, pull back to a double bottom, boom to the 200 for a swing trade. Goldman Sachs. This is my shitty bank. Got a neckline, shoulder line. Did have a double bottom here, and it bounced up to the 200. So we pulled back to that shoulder line again. And we could have a reversal to the 9. Back up to 318. But the resistance would be here in this Darvis box. Every chart you got to look at different. Little Darvis box in here and break out. So this thing can break out to the top of this box, then find some kind of resistance at the 9, and then maybe run up to 319. But that's a $10 scalp. You got a symmetrical flag. You got 3 white soldiers or 3 black crows. Hit the trend line. Now you're consolidating with an inverted hammer, and you can easily run up here to the 21 at 320. Hit each one of these candles as a resistance level. The body of them candles. Got resistance to break off the body of this one. Confirmation and body of that one there, and then run it all the way up to 307. You got 3 soldiers you'd be trading off of. Not as pretty as the other ones. AMD. You got 3 white soldiers right here. That's where I drew that next support, and then your final one is this ascending triangle. So this last resort should hold. I'd set an alert just right above it. And this is what I do all day long. If I'm not in a trade, I'm looking for ideas. So if that triggers off the top of that ascending triangle, what was resistance now has become support. Very solid. Very solid. It's very solid. I'd bet that we bounce off that ascending triangle. We did bounce up nicely. Once it did bounce up, that's impressive. So that could be a very solid support. And I've got my alert set at 59.12. The thing drops there, I bet you it bounces up off of it. I'll bet anybody $100. Got another snake. This is MU. This had earnings. Forecasts aren't as good, so what they're going to do. This is something to think about. Okay, let's say you had a company that has had nothing but excellent earnings. Just better than ever for consistent since COVID. And then you have Brandon come in and start a world war. So they're going to change the forecast. What used to be a jury forecast will be assumed differently. They'll start fresh. We got the stock going to $200, but we're going to lower it down to $150. So that's our new resting place. From here on out, that's going to be a solid place to break. So we're changing the map. The guidance wasn't so great, but when we lower the price, the guidance looks a lot better. So they adjust their prices as we go. It don't matter to them. What they were saying was a rosy outlook, and it turned out to be a piece of crap. they'll just summarize it. Now they've got a new forecast and they'll upgrade it and downgrade it, and so it still could be a great stock to play. And we've got a nice little ending candle right here for a reversal. I mean, these are reversal candles, these dojis. Inverted hammer. We have a doji here. Nice little pop. $4 or $5 pop, 3-day pop. I guarantee it, everything's set up right now for a reversal. Everything I've looked at. For a small bear rally. And I want to go through one more thing that I didn't talk about yet. Remember, copy and paste these flags down. You'll really want to learn this. Learn these for the beach trade. You want to make a lot of money and be in and out of here within a half hour of the day? Learn these candlesticks. Copy and paste. Learn these flags for continuation runs. And I want you to learn how to use the VWAP. I've got the RSI on here and the VWAP. No, that ain't the VWAP. Or is it? It should be, but it's not. Where's my VWAP at? I sure in hell thought that was the VWAP. There it is. Learn the VWAP chart when you're trading a snake. You can always use that VWAP as a resistance line. If you're trading a snake pattern, this is tops. Broke over the VWAP, then held support, and then finally gave up. But I use the VWAP a lot for a confirmation of exiting a trade. I have no fear, but fear itself. The buck stops at my desk. But after you've studied charts over and over, you lose that fear. I come in here with a bull attitude every morning and try to get that beach trade out of the way. And I can be done for the day. Especially when it breaks the ascending triangle. Boom! Okay, folks, thanks a lot. I really appreciate it. I hope this helps. Follow, subscribe, and ring that bell for future updates. You can follow me on social media, or you can join the Discord room. I plan on retiring at the end of the year, so I don't know exactly what I will be doing by then. I'll still be trading probably being live for an hour a day, because that's going to be my new job. Come in here, trade an hour, and be gone, and be done with it. I've got this strategy down pretty good. So, hope everybody enjoyed it. We'll catch you later. Retail traders.